Hello and welcome back to Investors Heaven. Today we're going to talk about a well-known media company, Fox Corporation. We're going to check whether it makes any sense to actually add this to our portfolio. And before we begin, if you enjoy these videos, please leave a like and subscribe. That helps the channel a lot. And if you love discussing about investing topics, as I do, you may want to join our Discord channel. I have a link for that in the description below this video. And so I'd love to see you there. Come join us. So, Fox Corporation, a company that has a $20 billion, almost $21 billion market cap over here. And let's take a look at the outstanding shares. They seem to be going down. So the company is actually buying back shares. They possibly believe that the company's stock price is undervalued. Let's take a little bit of a closer look, see if that's the case. So the dividend, the company is paying a little bit of a dividend here. 1.35 is the current dividend yield. And remember, the dividend yield is based on the current stock price as well. That matters. And we don't have a long dividend history over here, obviously. But the current payout ratio is at 26%, so it's more than safe. No trouble paying the dividend there, so it's absolutely fine. Income statement. Let's take a look at how much the company is making here. The year-over-year growth of the company seems to be kind of a steady company in terms of growth. Little growth over here, but always seems to be always in a positive gross profit here. So it's increasing slightly, not too much. And there are some years in which there's negative growth. So I'd say it's mostly like a steady company here. It doesn't really grow that much. I guess it's kind of affected by political situations as well, I'm assuming. So net income here, it's variable, like very variable here. Again, this could be affected by what's happening with politics. I'm not sure how Fox is affected by that, but I do believe they have like Fox News and the likes. So maybe that affects them. And let's take a look at the assets that the company has. That may be an interesting case here. So 6 billion, 9 billion, 10, 10.4, 11.3, 11.7. So they do increase their total equity. And we do know that they are not issuing more shares. So I'm assuming that they could be getting they could be getting some debt. We can examine that. And I'll actually check it on the cash flow, because it's the cash flow statement is actually better to check these things. The cash from operations is positive and slightly less than the last couple of years or so. It's about the same. Cash from investing normally, as you would expect here. Capital expenditures for the most part. Some acquisitions in 2020 over here. There was an acquisition of $1 billion. And some buying of market securities, normal stuff. But cash from financing, for the most part, they are paying back debt, it looks like. And they issued a little bit of debt in 2020, really, but in 2019, there was a lot of debt as well. But after that, not much debt over here. So that's good to see. And I'm wondering whether they're actually paying back any of it. So, right, they issued it over here. So are they making any payments over here? Let me check. So that doesn't have any interest here, so probably not. All right. So free cash flow, 1.4, 1.1, 2.2, 2, 2.1, and 2. So basically the free cash flow average is about $2 billion a year. Is about that amount every year, which if you give it a multiple of 20, it's which is actually a high multiple for a company like that. Doesn't seem to be growing too much, but even if you give it a multiple of 20, now that's the interesting thing. You're getting 20 multiplied by 2 billion a year. You would be getting a 40 billion expected market cap, and the current market cap is 50% of that. So that's very, very interesting. And if you give it, so this actually has a multiple of 10 free cash flow. Very interesting. So yeah, 2 billion a year multiplied by 10, you get the current market cap. So the company is making 10 times free cash flow as its current market cap is. Interesting. It looks like the company is relatively undervalued based on that. Let's take a look at the debt. I'm interested in the debt. Yeah, not that much, but I do want to check in the balance sheet the actual liabilities, the current liabilities, 2.8 billion. That's nothing, because they are making 2 billion a year, so they don't have many liabilities, current liabilities that require to be paid. What about the total liabilities? So the total liabilities are 11 billion, so that's a little bit more. So they would need about 5 to 6 years free cash flow. That's a little bit more than I wanted to, but it's probably not a huge deal. More than likely it's probably okay. It's close to my threshold, I'd say. It's about 6 times, I guess. Yeah, it's a little bit. They should start paying a little bit of that. But I'm not spotting any real troubles here, and I wanted to quickly check the price to book ratio 1.8. So that's also not a very expensive price of the stock based on the assets of the company. Normally, ideally, you want it to be close to 1 or less than 1, but that's kind of tough to get. So 1.8 is, I think it's fair. A projected P of 12.2 seems to be going well for the company. You would expect it to be at the same levels based on the growth that we have seen. Company doesn't seem to be growing that much. It stays at the same level. So what do I feel about this company, Fox Corporation, based on what we're seeing here? Would I buy or would I sell the company if I owned it? So I do like the fact that the price actually has gone a little bit down. Now, you wouldn't expect too much movement over here, although there was some back in 2020. I think this was when every stock went down, really. But for the most part, the company moves at a specific sort of level from like 30 to 40 for the most part. So as long as you can get it near 30 or closer to 30, you can pocket the dividend and just ride the wave, and maybe pocket also like a 25% to 30% gain in terms of its stock price appreciation. But you probably shouldn't expect an explosive growth over here, because the company is not also growing explosively. So it's not a very trendy company, but it's making good money, and the debt is relatively well managed, it looks like. So I think I'm a buyer of this company. It looks interesting, and I do like the fact that their current market cap is low relative to what they are making in terms of free cash flow. That's very, very important. And the fact that they are also not diluting shareholders, but they are buying back shares, which also indicates that they like their stock at the current level. So they're buying it back. So yeah, I am buying this stock, and let me know what you think. Are you an owner of Fox Corp, or are you thinking of buying it? Leave a comment below. Let me know what you think. And in the meantime, if you did enjoy the video, please take a look at this one that I made about ServiceNow, which is about to probably go higher just because they had some explosive earnings earlier today. So take a look at this video. Watch it if you enjoy this type of analysis, and I'll see you in the next one. Bye bye.